Maximus Analysis here for February 24th, 2016, and we can see that the bulls came in with a vengeance at 10 a.m. Okay, they made a run from basically, I think it was 1890 to basically where they are now, 1930s. Okay, the highs that we want to see if they're going to break to see some follow through is 1943 to 1946. Okay, we still have our basically our trend line here that we're looking at to see again if it's going to be a, this is my bear. Again, if they get below this, I'm looking at it as a bear market. Until then, they're still holding that 1871, and they're continuing to fight every time we get to that 1900 level, 1900 and that 1875, 1871, excuse me. So again, they got to it, and again, we were just under 1900. So it's not like, you know, the low number is 1802.50. That's the low that we need to get below and close below. Again, a tap of everything is what's happening, and this is the reason why I've been saying over the last couple of weeks this market is, you know, more poised for people that are aggressive trading, meaning, you know, on a half an hour, 15-minute chart versus people that are swing trading. Swing trading is very difficult because of how volatile it can be right now. So again, we'll see. We want that 1905 level to hold, and if they break above and close. So here's the kicker. We don't want it to get above and then just give us a long wick similar to something like this, where we thought, you know, again, the same thing, that if it gets above, we want to see where these things close. They can always tap above it. We want to make sure that this candle, hopefully tomorrow and Friday, will give us something more on a continuation bar similar to this versus just getting above and then flashing back down. So tomorrow and Friday will let things know. Again, also looking at the higher time frame, looking at a weekly, again, we want to see how this candle closes, because again, it's all about the close. Reason why I'm saying that is because as of, if you'd have looked at this candle yesterday, it would have seemed like a shooting star. Shooting star is similar to this candle right here, which is more of a bearish candle. And we still need to see where this is going to close. Currently, the evening star pattern on the weekly is still holding. So we want to see them. They probably got to the midpoint of this little range, but they are holding this number. So again, the 18... let's say the 1871 again is pretty much our critical level to try to keep above and go from here. So again, that's enough for the ES. Let's go to the NQ. NQ, same deal. Again, we had a pretty, this was a little bit more tidy in regards to how sideways it's been. Now we have a high volume hammer. So again, getting above this 4230 area is definitely something that they need to do, and close above it. Okay, close with a strong bar versus just something like this. So again, aggressive type of trading is warranted to just make sure you're locking in profits versus trying to look at exclusively a swing. YM, pretty much the same thing. Again, giving some type of bullish hammer, but again, we want to see a close above this. Again, they might even try to go for these previous lows of 17,000. Now, crude, again, we spoke about this yesterday, and I said I don't really like where it is in regards to just knowing who's going to be right. And again, I day trade this, but looking for the swings, you don't know where it is. It's like just in the middle of a box. It's just in the middle of this, and you're just halfway there, just trending sideways, and you don't know if this is a higher bottom potentially. You got to look and see what happens going tomorrow. So let's look at some names and go from here. We have Apple up $1.40. Again, it's near the lows, so you have your line in the sand if you're looking to go long. Again, this name is just trading sideways, but again, just because you get these candles, we don't know what's going to happen overnight. And it's been that type of trading environment that it almost feels like you take your profits and go and don't even hold overnight, unless you're holding futures where you can have a stop that won't have the gap up or gap down. You had Netflix up 250 basically, and it's basically, you know, this could be something that could be leveraged for a trade. Again, you're not looking for it to go through the moon, but again, having it hold this higher low, break above, you know, this 93.25 area to as a target of this 200-day moving average is not a bad trade as long as you manage your risk. You have Tesla up $1.79, so again, it looked very, very weak. But it still hasn't really given much. And again, let's look at a weekly time frame for Tesla to see where we are, and you could just see that we still have some overhead resistance. So if you're playing it saying that, okay, we have about another 1 or 2 weeks up to this 200 dollar range, that's fine. Just know that you have this overhead resistance that could come into play soon. And again, remember the environment we're in. You have Facebook. Again, this is a pattern I don't like either way, but and especially where it is, and within the, you know, we'll see what happens and what goes from here. So again, that's just, I like to see better patterns. Price line, again, holding the 200-day moving average, and again could really rocket up and using these lows as your line in the sand if you're looking to get long. Again, I'll kind of keep it right there, but again, a huge move off of the ES right now. If you look on a 15-minute, you could really see how much they moved from this 10 o'clock. They gave a little higher bottom and then it just never turned back. So I'm expecting some type of pullback. Again, just retracement, not pullback like it's going to break, but just want to see them stay above this 1908 overnight, and then we'll see what juice they have going into tomorrow. So again, trade them well, understand the time frames and the time that you're in, adjust your trading strategy accordingly, and we'll see what happens tomorrow. Take care.